I do think the cycle is dead, and I do think crypto is now.
So if the cycle is dead, what's going to happen to Bitcoin?
I think Bitcoin at some level is going to. One thing that's going to create a large amount of volatility into the market is AI is not just a buzzword anymore. It's a foundational part of a lot of number one investors' portfolios.
So what trends do you think that we're going to be seeing this year?
I think this year.
I get messages all the time asking me how I went from $100,000 in bad debt to a $13 million portfolio. By watching this show every week, I will share exactly how I did it, how I achieved it, and the lessons that I've learned along the way. So do me a favor and please subscribe to our channel. It's simple, it's free, and it helps keep the show going for you. This is where you eat and we talk about changing the way that you think about money, with insights from successful investors, entrepreneurs, and everyday people taking control of their financial futures. So double check that you're subscribed, and thank you for being part of this journey.
Welcome back, everybody, to the Lunchtime Investor Show. And we have here the one and only Keith Sullivan.
Hello, everyone. Welcome back.
Right, and I hope you're still enjoying your new year, all right? Even though we're now no longer on day one and day two, but I hope you still, your goals are still going. My goodness me. Right, we're going to be talking about most investors, right? Because most investors really aren't ready about what's going to happen in 2026. We're going to be talking about things like AI, for example. This is so important. People are jumping into AI, but which one is it? Is it the company that no one's heard about, which could be the new best thing, right? Could make a lot of money. Could be thousands of %.
But it also could lose you money.
Could do. Or do you go into the more stable ones? What are the trends? Do we jump into what's a buzzword, or do we really look at trends? Do we have a framework? Do we not? And then we're going to reveal a practical trend tracking framework.
Oh.
I think it's important to have a framework
100%.
on the trends.
100%.
Not just jumping in. Yeah. So that's what we're going to be doing, and we're looking forward to it. So what trends do you think that we're going to be seeing this year in 2026?
I think this year we're going to have a bit of a continuation of what we had last year. AI is not just a buzzword anymore. Okay, everyone thought AI is a theme, it's a meme, it's not a buzzword. It's a foundational part of a lot of number one investors' portfolios. Okay, and it's been adopted into the real world. Now, the problem that we have with AI...
That's more about the adoption, though, sure.
Yeah, but the problem is the theory of AI is so forward-thinking compared to the adoption that we're at. Okay, so what they're saying AI can do, with the infrastructure we've got right now, it cannot be adopted
so
as much as
you're
they
saying
want.
that most people, they're just kind of using ChatGPT to ask questions and stuff?
That's the beginning part.
Are you using ChatGPT?
Of course. Who doesn't use ChatGPT or any type of AI?
I'd love to know from people here, by the way, how are you actually using AI? How are you using? Because I'm on 2 AI courses at the moment. Quite basic, but then they build and they build and they build. So I've got 2 separate clones. I've got my clone, so it knows everything about me. I've attached certain files to it. So when I ask it a question, it goes to the memory of those files. And I've done one for this business as well. So how do you use it?
So I've got a mini Keith like you, okay? And this is just an assistant. So if we have articles, if we have videos, transcribe, anything like that, it basically condenses it and then pinpoints what I want to know, okay? And it doesn't just do it straight away. You have to train it. You have to say, this is what I look for. This is what I found on this article. What do you think? Blah, blah. And you have that conversation. You train it. It's like having a new starter, right? You get an employee.
But it might not remember the conversation. So the reason I put these massive files as part of it, so it goes there first. Because when you say train it.
Yeah, a lot of the GBTs that are around there, or AI models, they do have a history framework where they are able to obtain previous conversations. If you go into ChatGPT, on the left-hand side of the taskbar, you have all of your past conversations. And what you can do with ChatGPT is go, do you remember the conversation about this? Yes. Now we're going to be advancing on that. So bring that conversation up and let's do more on that conversation.
Okay. Really, really interesting. So that's kind of basically how you use it. Yeah. So that's a trend. So AI?
I think AI is definitely going to be a trend. Yeah. And we're going to see the next level of AI, which is quantum computing. I think that is the next stage of AI. Yeah. So all you see on quantum computing is more advanced computers. Okay. Because again, the theory of AI cannot be adopted because of the foundational framework we've got right now doesn't allow that.
So are we looking at Okay, well, what we obviously want to talk about is, so how do we take advantage of that?
Yeah.
So are we going to be investing in some AI companies? And if so, which ones? Not any kind of
Financial
recommendation or
advice. Yeah.
financial advice, of course, we're just talking. But also quantum computing them.
Yeah.
Are we investing in any of those?
Yeah, I think this is the next layer. But alongside more smart and sophisticated computers, guess what? You're going to need more smart and sophisticated security systems, right?
Okay.
Because if the computers are getting more advanced, it's easier to hack, it's easier to scam. So the security behind that also
You mean
has to go-
cybersecurity?
Cybersecurity,
Okay.
correct. So you need, like, for example, CrowdStrike, a classic example. I think it's one Kathy Woods does look at as well. But they allow more advanced security systems, the more advanced computing softwares that's coming about, right?
Oh, I agree. I think I'm trying to remember which one I'm in at the moment. Is it
Palo Alto Network.
Palo Alto.
So you've got CrowdStrike or Palo Alto Network. They're
Yeah.
kind of the two top ones a lot of people know about.
Okay, so we're talking about AI, so we want to discuss which ones.
Mm-hmm.
Then you said quantum computing?
Which we've got
Wow.
there.
Okay.
And
I'm
then,
not in any of those.
but a lot of the bigger AI companies are also having some level of quantum computing.
Okay, so not a pure play, just
Yeah.
that as part of another company. Okay,
Correct.
fine. It's really interesting is knowing why you're buying that company when something like Microsoft or Google, they do everything.
Mm-hmm.
So you're buying them for that, but actually they do so many different things. It's not a pure play, whereas a pure play could go up so much more, couldn't it?
No, it could.
But if it doesn't do well, it goes. Whereas with Microsoft, if that part of it doesn't do well, like the cybersecurity or whatever it is that's doing, it doesn't matter because the rest of it is making so much money.
But this is a conversation you've got to have with yourself, right? Do you want to take on more risk in a pure play? Because yes, it could go up, but it can also go down and lose you all your money. Or would you rather have consistency by getting into the bigger companies that are not a pure play, but they still have some level of elements to them that are in AI,
That's
quantum
it.
computing? And
That's it.
even if it doesn't work out, they're still making money elsewhere as a business, so your money is safe. So it's your choice.
Okay.
As an investor, you should be doing both, by the way.
A little bit, but it depends on how much money you put in each.
Of course.
Because I'm assuming you put less in the ones that have more risk.
Correct. The more risk you take on, the less investment you're going to have.
Yeah, I think that's important because you can't put 1,000 here and £1,000 here and £1,000 here. They're two different companies.
No.
You shouldn't do that. And I think that's what most people do. They go, well, I'm going to put some here. I'm going to put some here.
They-
This one goes to 0 and this one goes up 10%. You go, 10% is great, but losing 100% is terrible.
100%. And this is
100%.
where we're going to be talking about the framework. And I think at the end of the video, we're going to talk a lot about framework.
Okay.
Because that's,
So what are the trends? So AI, quantum, you got cybersecurity, anything else we
and
should
then
be looking at?
crypto.
Of course, blockchain.
Yeah.
You see, but is that continuing though? Because like my MicroStrategy position, it's funny that I'm still up over 60% on it, but it's just falling. I think I was up 500% at one stage. It's just gone down. I'm like, why is it not going up?
But this is another thing with everyone going, oh, I bought MSTR, I've got into this, blah, blah, blah. They only bought MSTR because of the Bitcoin holding.
Absolutely.
Okay. But what happens if they have to sell their Bitcoin at a potential loss?
Or
they
their
have to
average
take-
price is so low.
But even if they have to take Bitcoin off their assets, how is the other part of the business being sustainable?
It's not.
This is the point, right? So
Yeah,
as an
They're losing
investor,
money.
you want to make sure your company is already, as the core foundation part of the company, is making the money.
Well, that's
why
interesting
Tesla-
though, because a lot of the treasury companies, that's what we're talking about. Treasury company is basically the company that decides, they were doing drinks and now suddenly they're a treasury company, which means that every single cent that they've got is they're plowing into, well, first of all, it was Bitcoin. Then there was some on Ethereum, not that many. Then there were some Solana ones. I mean, they've all gone down massively. I mean, massively, not just a little bit. But it had nothing to do with their core business at all.
That's it.
I mean, nothing.
That's it. But this is why, if you're looking at something that invests into crypto but has a core business which is growing and sustainable, Tesla's right there. Tesla buys Bitcoin as part of his assets, but their business is also growing.
I think we're going to be talking about Tesla in just a moment because we're going to be watching a video by Kathy Woods as well that mentions Tesla. Let's talk about that in a moment. Anything else?
No.
So we've got crypto, blockchain, anything else?
I think they're their main trends that we're looking
so
at.
is the cycle, the 4-year cycle, right?
Yeah.
Which you need to quickly explain, right?
The
What
4-year cycle
is, and then is it dead?
Okay, so in simplest terms, the 4-year cycle comes into two parts: a bearish part of the cycle where prices go down, and a bullish part of the cycle where the prices go up. Now, a 4-year cycle, you have a majority of that cycle being bearish, and then you have a bit of the cycle being bullish. Now, the bullish part of the cycle means you make quite a bit of money.
Yeah, but why? What's it
Because
the halving?
the halving. So if you're looking at something like Bitcoin, you have Bitcoin halving, which basically means they limit the amount of supply of Bitcoin into the market. And simple terms of supply and demand, if supply is low and demand is high, like Bitcoin, price naturally goes up.
Yeah, but let me simplify a bit. So basically, every 4 years, what happens is that the supply or the amount that is being given to the miners that look after the network, that look after the blockchain, is halved. So imagine if we had only half the amount of properties being built every 4 years. It happens every 4 years, right? And so that puts, there's a problem with the supply, right? And if the demand is constant, the price should really go up. But if 4 years later that is halved again, and the supply is constant, sorry, the demand is constant, and the supply is halved again, you don't have any properties there, right? And the situation we have right now with institutions is that the demand is actually going up.
Correct.
So if that being the case, we should have had a massive bull market, and we only had a bit of a bull market.
Correct. But
So is it dead or not?
We said it in a couple of videos ago. I believe it is dead.
Well,
Now that you've got institutional investing and institutional structure coming to the play, why would they allow an asset they're investing into to go down for 2.5 years? They wouldn't, right? They would not want to be losing money for 2.5 years in an asset. They will want prices to go up, down, have more volatility. So if we look at the likes of Bitcoin, for example.
Oh no, so they're keeping the price suppressed, you're saying?
This is the point of that conspiracy, right? They're saying institutions are selling previous Bitcoins or crypto that they held when they bought it illegally because they didn't have regulation. And now they're buying with new regulation.
Oh, interesting.
That's the theory behind it. It's a conspiracy.
So if they're buying, they should go up. But you're saying it's got nothing to do with the halving anymore.
I don't think it's anything to do with
I've got another theory, okay? So when it was 50 BTC per block and it went to 25, that is one hell of a drop.
Correct.
Percentage-wise, it's still half, right?
Yeah.
But it's a hell of a drop. Now we're at 3.25 or something. The next one's going to be 1 point. So that's not a big drop.
So are you
50 to 25? That's huge, right? 25 to 12.5 is still pretty big, but now the drops are nothing, and therefore there's hardly any difference in the
how
supply.
do you read it? Do you read it percentage-wise or numerically?
I'm talking about numerically.
Yeah, because if you're a percentage-driven investor or trader, then you're...
Yeah, but that's got nothing to do with it. I'm talking about how many are actually coming into the market.
Though.
Yeah, but how much is coming into the market?
But if you have a look...
There's hardly anything coming to the market. Well, it was hardly anything like 4 years ago either.
No, but if you have a look, if you think of a percentage-driven person, they think 50% is a big drop.
But forget about the thinking. I understand what you're saying in terms of, I've made, £1,000 profit, and the other one goes, well, that's only 10%, and the other one goes, well, I've made £1,000 profit, but that's 100% on what? Yeah, that's amazing. But I'm just talking about how many Bitcoin are flowing into the market.
But then you've got to also think about how does it dictate people's emotion. This is why I was talking about percentages and numeric value. Because if you...
Well, hold on, you're arguing against your own case here.
No,
you're arguing against your own case. Because you're saying it's dead, and I'm going, yeah, the reason is because it's hardly a drop. But you're going, oh, but it is quite a drop.
But that's you were saying about the conspiracy of, okay, I expect 50% drop in the market, and going from 50 to 25 numerically creates a lot more fear with people, and people buy and panic. Okay.
No, it's just that, no, I'm not saying that at all. What I'm saying is that there is a real drop from 50 to 25 Bitcoin, a huge drop, right? Percentage-wise, it's the same. But when you're going at 3.25, and in the next cycle, it'll go for 1 point something, whatever, 1.5 something or other, that's not much of a drop from 3 point to 1 point. It's just not a big drop.
It's not.
There's hardly anything going in, and now there's a little bit less, but there's still hardly anything going in. Anyway, let's move on. We'll agree to disagree.
But I think
I'm right.
Marcus is right there. But if we have a look at the cycle, I do think the cycle is dead, and I do think crypto is now classed as a risk-on asset. So
explain what that is, please.
So risk-on asset is basically an asset that has risk in the name, risk-on. And it basically follows what the economy is doing. If the economy is growing, these assets grow. If the economy is slowing down, these assets slow down.
And what's happening to the economy?
So right now, the economy was slowing down, but we've now got inflation coming down, interest rates coming down, and that's a great environment to allow risk on assets to grow.
So that was the other trend that we didn't talk about then, is the fact that interest rates are now actually coming down.
Correct.
Yeah. Do you think that's going to continue in 2026?
I do think it's going to continue.
So that's going to be good for the market.
It will be good for the market, but there's an 80-something% chance that this meeting in January, there's going to be no cut. They believe that there's going to be no cut in January.
Okay, fine.
But in the 2026, they're predicting 2 to 3 cuts as a Fed.
And is that got something to do with the fact that Jerome Powell won't be part of that anymore as well? Or
no, this is already discussed with Jerome Powell. But I think without Jerome Powell, you can have a lot more. But there's a lot more uncertainty. And remember what we say, markets hate uncertainty.
Yeah.
So who is going to come in? How are they going to cut interest rates?
Right,
What
so
are they going to
when
do?
a couple of weeks ago, Donald Trump decided to, people are saying invade Venezuela. I mean, well, hardly an invasion, but okay. I mean, can you imagine that, right? They're their own country, and another country decides to go in and kidnap the president
And just take him away.
and then say, right now, we're running your country. I mean, that is like,
Yeah, and
that's
that
scary for most leaders, no?
oh yeah, and geopolitically, it creates so much more tension and uncertainty because you've got some countries going,
Exactly.
you should not be doing this. Some countries saying you should be doing this, and you've got countries like the UK. The UK done a UK thing. They went, we cannot tell you what we think until we get more information.
No, they were like, yeah, we weren't part of it, but yeah, we're not going to say anything. Yeah,
Just a typical UK thing.
Well, it's
But
diplomats.
I think that uncertainty again, when there is uncertainty issued into the market,
Is that going to
you will-
continue? By the way, is that a trend in 2026 that Trump is going to go in and say, well, I'm going to take this dictator. I mean, he was a dictator, though, right?
I believe so, but I don't look at politics and what goes on.
Yeah.
I just see, right, this is what's happened and this is how it affects the market.
Fair enough.
Because once you start putting your political views into play, your emotions dictate what you do with an investment.
Okay.
Once you
So if the cycle is dead,
Yep.
right? So what? What's going to happen to Bitcoin? You've heard it here first.
So
He's going to tell us.
if the cycle is dead, I do think we're going to get more of a bullish trend. Okay,
Bullish?
I think we're going to see Bitcoin because of the supply and demand issue.
Okay.
I think Bitcoin at some level is going to follow what gold was doing. Okay, and slowly grind up, down, up, down, up, down. I think there'll be less volatility in the market, but I do think we're going to have a slow grind to the upside now. So we are going to start to see that trend. One thing that's going to create a large amount of volatility into the market is what MicroStrategy does and how much Bitcoin they sell back into the market.
Right.
If they do sell,
You think they're going to sell?
there's talks last year about them taking Bitcoin off their assets because of the money they're not making.
Interesting. I've never heard that.
So it's
Do you
definitely
think
something.
Bitcoin is still a what was it called, a value, a source of value, a store of value,
Store of value. Yeah.
like gold? They're talking about as liquid gold. Well, gold's gone boom, 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 and Bitcoin's gone like that. So I mean, where's the store of value story?
The only problem that you see with gold is gold's a safe haven. So what people tend to do is when there is uncertainty and a lot of fear in the market, they go away from risk on assets like tech, so like your Teslas, for example, and then they invest into gold because it's the safest type of asset. Now, you've just got to ask yourself, is Bitcoin going to be that asset that they're just going to jump into?
So what do you think?
And I think just because of the low amount of supply that's in the market or coming into the market, I do think that is definitely
Okay,
something
so
that's gonna happen.
eventually we're hoping that it's going to catch up with
Yeah.
gold, you know. So look, let's talk AI technology. Let's listen to Kathy Woods. You know, her $1 billion funds that she's got. She has so much research going on as well. Let's listen to her here and play this video on the Diary of a CEO.
How are you investing your money to capitalize on AI?
I should mention we have an AI and robotics fund, which actually is unique to Europe. We don't have it in the United States just because of the way we set our funds up originally. But AI and robotics are converging importantly. Many people used to invest in AI through one stock. That was NVIDIA. That was the check the box. I own the GPU, the chip manufacturer, which is the most important chip manufacturer in the AI age. And its valuation, meaning price relative to earnings, really got up to very heady levels. And we were saying at the time, well, if NVIDIA's valuation is correct, there are going to be a lot of other winners. Who are they? Well, our largest position in the flagship strategy, ARKK, is Tesla. And as we were trying to help people understand why we were swapping away from NVIDIA to stocks like Tesla and Palantir, which is a software provider, we were trying to explain that this new world around AI is going to happen very quickly. Tesla will be the largest AI project on Earth.
Wow. So, wow. I've made a couple of notes here. Tesla is going to be the largest AI project on Earth, and talked about the convergence of AI and robotics. But Tesla is my largest stocks position.
Mhm.
And I'm not convinced that the current price mirrors the robotics part of it,
Of where it could potentially.
of where it could potentially
Yeah.
go. Because we didn't mention robotics, 2026, too early?
I think for me, a little bit too early.
Mhm.
If you're looking at the robotics side, I think it's more on the autonomous driving side that they're going to have that in play. When I think about robotics, what was that movie with Will Smith where the robot went
iRobot.
iRobot? That's how I think about robotics, right?
Yeah.
You've got iRobot. Now you are seeing other countries having tested robotic robots.
Yeah.
But I think with Tesla, it's at the point of autonomous driving. I think that's the first thing.
And is that in the price, do you think?
The autonomous driving is definitely
In the price?
I definitely think it's
Okay.
priced in with Tesla. The thing about Tesla is who is running it. Because Elon Musk is amazing at a lot of things, but he creates so much uncertainty with investors
But
with
I
what he
love
does.
that, Keith. I love that about him.
Mm-hmm.
Because you've got a company that's got all of these different things going on, and they're very synergetic as well.
Yeah.
If you think about all the stuff that they do, because you've got this car, people think it's car manufacturer, but it's also a data company because it's taking all of this data, which is then feeding into the autonomous vehicles, right? Then you've got all the robotics, which obviously it's a robot car, right?
Yeah.
So it's all like, and then he's got the boring company, which is creating, where cars can. He's clever, man.
No, he is, and he's building a
And
lot.
when he does stuff, like go on to Joe Rogan and smoke stuff, and then, but so what are we always looking for? We're looking for a company that really long term has got massive growth potential,
Yeah.
and that can't go to zero,
Correct.
and hopefully has a lot of volatility, so you can keep going in
Mhm.
and getting a lower price and coming out and taking some. So isn't this the perfect company?
For us as investors, yes, but for new investors, no.
Oh.
Why? Because with a new investor, they don't really have a structure. They don't have a strategy. They allow emotions to dictate. Now, with something like Tesla, there's a lot of volatility, which I love, you love, right? Because we could get in, out, in, out. We're able to compound our returns. But with a new investor, what would happen is they'll buy Tesla, and then Tesla will all of a sudden drop 30% in a couple of weeks. They will panic at that point and they will sell out.
Yep.
That is why new investors hate Tesla.
Mm.
But as veteran investors, if we want to call ourselves that, we have a structure, we have a strategy, and we know how to combat volatility, and it works so well for us. So I do think Tesla is great. Palantir is another large investment that I've got at this moment in time, and they have contracts, government contracts, they have retail contracts as well, and they have contracts with the NHS in the UK in regards to software provider. So again, that is another opportunity that you can invest into. When you look at AI, Kathy Wood said it 100% correctly there, of it's not just one company anymore. It's all different areas that AI can affect. Software, computing, hardware. You've got data centers. You've got robotics. You've got power, as you were just saying. There's so many different areas that AI is going to influence. And it's all about, can you be diversified and find either a pure play, which you said, or would you find a company which dabbles in different areas of AI?
Like Tesla.
Like Tesla, like NVIDIA, like AMD.
But
These
wouldn't
type
it
of
then
companies.
also... Hold on, I wouldn't... But AMD is a pure play, isn't it?
AMD is a pure play, but they are working alongside taking
Fine, but
data
when I'm
centers away
talking
from
about... Yeah, but I'm talking
NVIDIA.
about, like, a company like Google that does everything, or Microsoft that tries to do
Amazon.
everything. Yeah.
Okay, because you've got Google with their data centers, you've got Amazon AWS. People don't really understand how powerful AWS is. It runs all of the internet. It runs a large majority of crypto when it comes to data storage. AWS is huge, but people don't realize that. They think crypto is just crypto, but it's actually being ran on the back end of AWS.
Yes.
So
So if something happens there, they're...
yeah.
big
So
trouble.
if you're looking at a diverse play, Amazon could definitely be that in regards to AI, crypto, blockchain,
Yeah.
retail. They have so many different areas that they generate money from.
Yeah. So I guess she's saying that Tesla is the kind of company that does so many different things and all leading edge
Mhm.
and all the best of breed.
Yeah.
That's why they've got so... And by the way, just because people say, oh, she now and again when the price goes up, she sells some and they go, oh, they're selling. And the reason is, of course, is that through the regulation, she can only hold a certain percentage in one stock. If it goes, they're doing really well, suddenly 50%. So she has to sell some. It's not because she wants to.
Yeah.
But it is part of the strategy that they've dictated in their marketing material. They actually have to do that. Any more reactions on that?
No, I think that's definitely one thing. But again, you always do your own research. When you watch people online, they will always talk positively about an investment that they've got running because they want price to go up, don't they?
Yeah.
Or they'll talk negatively if they want price to go down of something they want to get into.
Yeah.
So you have to be very smart in what you do and do your own research for these types of investments.
I have a question for you.
Yes.
Why bother doing any research? Why not just go online, type in, I forgot her name, Woods, what's her name? Kathy Woods. And then look up what she's got a huge research department. Why not look at what she's investing in and just follow that?
You can definitely do that, but then you need to understand why she invested, how long she's investing for. Is it a short-term play, a long-term play? How she's entering,
It's
how
all
she's
long-term,
exiting.
man. She's doing all the stuff she does is long-term.
Yeah, but
They're down massively in most of her funds.
But with Kathy Woods, I understand it's more long-term, but you've got other investors that you cannot tell. And I had this conversation so many times of, oh, this institution's buying this and this and this. I'm just going to buy these. What institutions are buying? Yes, but why are they buying them? What are they doing? Are they investing? Are they trading? Is it long-term? Is it short-term?
She's long-term.
But Kathy Woods is an anomaly in that sense of, okay, it's just a long-term investment. But again, you also want to be diversified.
Did you agree with me then? We should just go onto her website, look what she's investing into, maybe listen to some of her discussions online.
I agree at some point of finding the asset. I 100% agree.
Because she's got that research department.
Because she's done the research. I don't agree by just buying and holding because that doesn't work.
No, of course, you need a strategy with it. But I'm saying, isn't that what we should be doing?
But we're in a lot of her companies, by the way. Us as a community at Investment Mastery, we're in a lot of companies she's in with the research we've done alongside it.
Yeah, no, that's true. That's true. Okay, let's look at this now. We've got somebody here who basically talks about doubling down on AI. Is that what we should do, or is it time to move on? I'm going to read this out. So 2025 was chaotic and driven by AI hype and policy whiplash. Big tech like Nvidia and Google stayed dominant, while surprise winners delivered 100% plus returns. Which was the discussion we were having, wasn't it? About, do you get a pure play, which could go up hundreds of percents, or do you have, like the Googles that kind of do everything and they're not going to go to zero, right?
No.
Heading into 2026, it feels like a crossroads. AI is still early, but the focus is shifting from chips, like Nvidia, to the boring infrastructure, power, cooling, and data centers.
Yeah.
So that could be the next one, the next layer to invest into, Keith. So I want your thoughts on that, please. At the same time, stretched tech valuations and easing rates could trigger rotation into overlooked sectors like banks, industrials, healthcare, and commodities. I don't know about that. How should I be approaching 2026, Keith? Staying AI focused, picking old school favorites like Nvidia and Google, or blending both?
Yeah. So number one, with what he was talking about of lower interest rates is going to be a rotation into risk off assets. That's not the way the market normally works. Number one, because risk off assets is when the economy is not doing well. That's their safe haven. When the economy is doing well, people go to risk on. Now, what you're seeing is a risk on area of the market needs two main things on the economy to grow: low inflation, low interest rates. If you get both, risk on technically goes bullish. So you have more bullish momentum in risk on than risk off. It's just a standard rotation.
So you're saying, from a bird's eye view, looking at the macros, you're saying with interest rates coming down, it is more likely that people are going to be investing more in risk on assets.
Correct.
And therefore, it shouldn't be the banks, industrials, healthcare, and commodities. What? Maybe commodities.
They're still going to grow. They're still going to grow, but not as much.
Okay, and then the others are like tech is likely to grow a lot.
Yeah, but why is tech likely to grow? Because tech is interest rate sensitive. Tech takes on a majority of debt, okay, to be able to grow. They have to take on debt to be able to innovate new products, grow their products, research and development, the R&D side of the business. Now, with high interest rates, tech can't do that because they can't take on debt. Or they have to pay more back on their debt so they don't make as much money. With low interest rates, what can they do? They can take on more debt, they can invest back into themselves, do more research, and actually make more money. And the second thing about this is tech-based companies, if you're looking at the retail side of these companies, retail investors and, people who are spending money on them, they will spend more money with low interest rates because why? They take on credit cards. They spend money they don't have.
Right.
They buy stuff they don't need.
Well, then I guess you've answered the question then. So if the answer is, how should I be approaching 2026 in one sentence is?
Go to risk on assets.
Go to risk on assets.
Yeah, correct. But then if but that's a broad term.
Pure play or hybrid?
This is the point, right? Because if you're looking at something like semiconductors, on the semiconductor side, you just look at the manufacturing process. Okay, what company provides the materials? So the commodity side. What company provides the machinery? What companies provide the patents of the software that's happening? What companies are building the chips? Which companies are distributing the chips? There are so many different ways you can invest into just semiconductors, which is technically a part of AI, through the whole manufacturing process.
Yeah.
So you need to have, number one, guidance on where I should be going. That guidance can either be with a community, your understanding, or coach and mentor, or you follow what someone else is doing. And again, you need to have 100% faith that they are doing it.
Yeah. Right. So therefore, I mean, because I was pretty sure about what I was going to do, and then you said, and by the way, there's the whole kind of like from commodities, the raw materials to the the assembly of it, the manufacture of it, the assembly, the packaging. You can go into a packaging company.
Yeah.
All right, I don't want to do that, right? That doesn't sound very sexy. The logistics of getting it out to people and all this kind of stuff. Like, just keep it simple, no?
Keep it simple, because you can overcomplicate it. One thing I spoke with our gold members a couple of months ago was silicon wafer technology, right? And yeah, it's so boring. But again, that's the next layer to data centers. Because right now, what data centers are using are copper cables. Problem with copper cables is they overheat and they get congested. So the transfer of data is slow. Whereas silicon wafers basically transfers the data into light, which means they can do it fiber optically.
Yes, but if you do that, then you're going into a pure
play. Oh, correct.
But a real pure, like niche pure play. And it could either go up 1,000% or nothing.
But you have a look, a company that's already doing something like this and building silicon wafers, Intel.
Intel
are doing it.
Wow.
Right? That's
Well,
why Donald Trump wanted to invest quite a bit of money into Intel. Okay, that's why AMD has done a partnership with
Sounds
Intel.
to me, though, a little bit like speculation, what you're saying there.
It is speculation.
Because that's not a blue chip company.
Intel is not anymore.
Yeah.
It was a blue chip
was
company.
A blue chip. No, you're right.
But they still have a strong structure, and they've just done a deal with NVIDIA.
Yeah.
Why did they do a deal with NVIDIA?
Yeah.
Because NVIDIA wants to build up their data centers.
Yeah.
It all interlinks together.
See, the more we talk, the more confusing it gets, because there's this and there's this and
Correct.
there's that and there's this, and it's like, I think it's important to write down what are you trying to do, keep it simple on one page, and and follow.
If you want to keep it simple,
Yeah.
top 5 companies: Tesla.
Not recommendations.
Not recommendations. Tesla, NVIDIA. You then got Microsoft. You've got Google. You've got Amazon. There's your 5 companies. If you want to keep it simple, and where they are basically taking advantage of a lot of different areas of AI.
So every time there's a dip, like try and buy at a cheaper price. Don't
Correct.
just buy now, right?
But have a strategy to that.
Got to have a framework. Look, we're gonna talk about this, like, because like we like trends. So what did we say the trends were? We said AI.
Yeah.
We said blockchain.
Correct.
You said cybersecurity, and I agree with that, by the way. And what you said quantum computing. Which quantum computing company are we supposed to have been invested in? Because I'm not invested in any.
Again, if you're looking at that, Google, they have it. Microsoft, they're already building and working on quantum.
Oh, so you're not talking about a pure play?
That we haven't.
Like Rigoletti computers or something like that.
Because the pure plays at this minute, again, are very speculative.
Okay, fine.
So it's about investing in small amounts of money with them.
So trends, yes, not buzz, not
No.
buzzword, Martins, not buzz, right? Trends, right? The big trends where people are jumping in, right? People are saying, well, so I'm going to go into like next the clothing manufacturer. That's not what? No, that's not a big trend, right? And then say, this is just my opinion, what are the number one? What's the number one? And if you have to do number 2 because they try harder. But basically, it's the number 1 that I would be investing in on every dip, right?
Yeah.
And that's like, wow, that's just so simple. I like to keep things simple.
Yeah.
So let's do this. I'm going to go through where there's trend chasing, being reactive to the latest buzzword, or there's following a framework on the latest trends. Which one do you want to do?
I think we go to normality of last year, and I do the trend chasing. You normally
I do the good stuff. Yeah, what you're supposed to be doing. Okay. So the decision driver on you, which is the buzz chasing, reactive, would be what?
Yeah, so it's basically hype investing, chasing headlines, short-term narratives, basically allowing your decisions to be based on emotion of what everyone else is talking about.
And by that time, it's probably too late.
Yeah.
Following a framework, much more disciplined, of course. The decision driver is predefined rules and criteria, which I've written down So if there's a headline, I'll go, yeah, but these are my rules.
Yeah.
Okay. What about emotional approach?
Again, when you are looking at trend chasing, you're reactive, you're running on FOMO, the fear of missing out. And again, like you said, when you invest, you probably invest too late because everyone else, while you're buying, they're probably selling now and taking profit.
Sounds extremely stressful to me, I have to tell you. Following a framework would be much more about calm, disciplined. You've got it written down. There's no emotions. Just do what it says there. Yeah, but forget about that for the moment, right? Which is much more, you're confident about your strategy. You probably back tested it 100 times, which would take you a day.
Yeah.
Because you just go back in the charts, right? What about consistency over time? What would you say?
Simple, no consistency. They're very inconsistent with the results they get. They make money, they think they're the best ever investor, and then all of a sudden they lose a lot of money.
And then they'll change it quickly, jump onto the next strategy, and that works for a while. Then it doesn't, and they'll do the next. In the meantime, if they would have stayed there, that would have worked.
Yeah.
Right.
And they blame the market rather than themselves.
Of course. Following a framework would be just repeatable processes. Yes, there will be some cycles where you're not making money, but that's all part of the process. As long as you're making more than you are losing, that's a winning strategy.
Yeah.
What about response to market changes when it changes? We just said it, but let's just do it again.
Simple term, shiny penny syndrome. Chase the next big thing that they think is going to be the one they're going to make them a millionaire. It's not about getting rich quick. It's about getting rich for certain. That's what investing is.
Over time. People are in a rush. But the thing is when you're in a queue and you see the other queue go faster, you want to jump in the other queue. And then, of course, you look over and your queue is at the front now.
The amount of times I've done that in traffic is just ridiculous.
Well, there you go, right? Following a framework will be much more disciplined. Adapting, yes, but with structure.
Yeah.
And not emotion.
It's more data-driven.
So the emotions is out, basically. Yeah, that's what we're saying. Okay, very good. And with the right trends, and I think, I'd love to know from the others, by the way, we'd love to know, what do you think the trends are going to be? Like, is there one trend that you think that we're missing? I'm sure there are.
No, there definitely is. There's definitely a couple of trends. I think there is definitely a couple of trends. We ain't spoke about nuclear. We haven't spoke about uranium. These trends have always been about, right? But again, these are...
But I have no certainty there.
No, of course. So that's why we're not focusing on them.
Right, okay.
Because there isn't that certainty.
Yeah. Okay, very good. Anything else you want to mention there?
Not really. I think the main thing is just having a framework, keep it simple, get into the best assets possible. So the bigger companies, follow a simple strategy, and don't let emotions dictate what you do.
Yeah. The most important, well, they were all important, what you said there. The best companies, right? And people always say, yeah, but how do I know they're the best companies? And, you're an expert in fundamental analysis, like, what is the PEG? So, for example, I read that the PEG ratio, the PE over the GE, the growth, is for NVIDIA, it's actually really low. It's below 1.
Yeah.
Yeah, but if that's the case, that is inexpensive right now.
No, of course. But when you look at...
of course. Why is that of course?
This is the thing. If you look at valuations of the market,
yeah.
Will the market stop buying Tesla because its class is being overvalued? What do you think?
Did I say Tesla?
No, I know, but I'm giving an example.
Oh, okay.
Do you think the market will stop buying Tesla just because its PE ratio is overvalued or the PEG ratio is overvalued?
No.
So it doesn't play a part.
Yeah, but I'm just saying that normally in technology companies, the PEG ratio is really high.
Oh, of course.
And this one here, if it's true, right? We pay mentors a lot of money, so you guys don't have to, right? But is below 1, and that means it's undervalued.
Undervalued, correct.
NVIDIA's
had great growth though.
A huge growth. But that's what I'm saying. It's over 300%, and it's still undervalued? Question mark. Wow. Okay, so listen. Let's finish it here. I'm looking forward to our next one already. I tell you, that was a good discussion, but don't miss opportunities, especially this year. This is your year, right? So therefore, build a plan, succeed in 2026. And what's the best way to start?
Just get started. Download the books that we offer.
Absolutely.
Links are below.
Free for you here. You can buy them if you want, but they're free here. The Lunchtime Trader, which is all about stock, 25 years of experience, and the Lunchtime Investor, which is all about cryptos. Final thoughts?
I think just following on with what we did last week in regards to goal setting and what we're doing this week, I found a figure, 90% of people actually stop their New Year's resolutions by the end of January. So just don't be that person, because investing and trading is, again, not get rich quick. It is get rich for certain, but you need a structure. You need a foundation. You need a community, and downloading the books is the first way to go about that.
I love that. There's another hack, of course, which I've got to ensure that doesn't happen.
What's the hack?
I don't make New Year's resolutions until February. Okay.
So not
actually that's anyway.
New Year, new me.
Oh yeah, you don't like that, do you?
No.
You said that the last episode.
Yeah.
You do it every quarter.
Correct.
I love that. I really love that. I really love that. Okay, so look, final thoughts. Markets will always change as well, but just have a framework, have a structure, and then we're all good to go.
And don't panic.
Don't panic.
There
When
you
things
go.
go down, it means it's cheap. And I'll see you at the next Lunchtime Investor Show. Thanks, Keith.
Thank you, Marcus.